All right. Today's SPY was up 0.75%. And once again, we're bouncing off this very critical support at SPY 420. And we're back over this rising 200 daily moving average. So do not rule out the possibility this is a correction within a bull market, especially while we are above the 200 daily moving average. Now, if this 200 daily moving average rolls over and price breaks below 420, then we can start to say the bull market is likely over. But so far, we just haven't seen that. And you need to be very patient in this support zone because there can be plenty of traps in both directions. And that's why I still think we're likely in a range between 420 and 430. And it's not really until we either break down or we start to reverse this correction in this downtrend that we're going to know where this market is going. Although I still heavily favor the fact that we're likely going to have a Q4 rally that could easily start us back towards 460. There's lots of reasons why I think that's going to be the case, but it does not matter because we're either above or below 420. So whether or not we get the rally is going to depend on whether or not we can stay above 420, because below 420 it's looking a lot less likely with these three lower highs and then the breakdown below 420. That will likely tell us we're heading into a deeper bear trend. So very critical support right there at 420, and then below that we're likely breaking down. And then the bulls really need to start breaking back over 430, getting back above a lot of these moving averages, reversing this bear trend and starting to make higher lows and higher highs. So be disciplined and be patient. This could be a bottoming process or this could be a major breakdown. We don't know until we see what happens at this level at 420. Patience and discipline, and as always, manage your risk around this critical level. On the NASDAQ 100 triple Qs, we were up 0.97% today, and just like SPY, we bounced off this critical support right here at 355. Now, if we break down below 355, it should be a straight shot to 347, and then below 347, we start to break down towards the rising 200 daily moving average at 338, and that gap close around 333. The bulls need to break back over this resistance right around 362, and then get back over this critical resistance at 370, and that should be enough to tell us that we're out of the downtrend and resuming to higher prices by the end of the year. Manage your risk right there at this critical support at 355, and as long as we're above it, it is okay to stay long on this market. On the Dow Jones, we were up 0.64% today, and the Dow Jones bounced back up above this support at 331, but we are still bearish below all of these moving averages and this resistance zone right around 336. So we really need to start seeing higher lows and higher highs or break this resistance up here right around 341 to tell us that this downtrend is over with. And if we do get a break of that resistance, it's very likely we're going to break out of this resistance trend line and start into a bull trend. But as you can see, we are very oversold. So even if we start to bounce, you're still looking for strong resistance and a possible lower high between 335 and 336. If we break down below this support right around 331, we're likely going for that next leg lower right around 327. On the Russell 2000 IWM ETF, we were up 0.87% today, and the Russell below 170 was likely going to 164, and we got very close, but we never fully hit the price target, so it's still possible we go a little bit lower. But once we hit 164, I would expect a bounce back up towards 170, is possibly even as high as 176, because we are going to be due for a lower high, even if we are going to continue lower. And if we break 164, this is going to look like there's no more support into significantly lower prices. So 164 is a very critical level. If you're shorting, I would not short at 164. And if you don't mind trying to catch a falling knife, 164 would be a risk level. On the ARKK ETF, we were up 2.94% today, and we did fill that gap and hit the price target at 36 yesterday, and I told you that could be a potential bottom, but because we're in such a strong bear trend, I would wait to see a break of resistance and higher lows and higher highs to confirm we're out of the downtrend, which is going to require a break of this resistance up here right around 40.5, or at a very minimum, the break of this resistance zone right around 38. So be patient and understand this is a very strong downtrend, so there's no reason to get overly bullish in this ETF unless we get a breakout and a reversal of trend. On the VIX, we were down 6.88% today, and the VIX is crushing back down below 20, and I've told you many times in a bull market, we should not spend too much time above VIX 20. So this is good news for the bulls to see the VIX crushing, but we need more follow through, and I would really like to see the VIX breaking down below 18. And then this could be telling us the correction is over and we're resuming the bull trend. But if at any point we spike back above 20, simply get more risk off because that's where you're going to start seeing high volume panic selling. On Bitcoin, we're currently up about 1.5%. And last night I was telling you Bitcoin needed to break through this resistance at 32,000. And then shortly after, Bitcoin did break through that resistance and we went straight to the next price target at 35,000. So it's very difficult to look at Bitcoin getting 2 days in a row of very high volume and seeing anything other than risk on sentiment, which I do believe is going to carry over to the equities. You're usually not going to see Bitcoin going on a face-ripping bull rally and then stocks going into a bear market, so do keep that in mind. As a whole, this market is looking risk on. And as far as Bitcoin goes, you're staying bullish as long as we're above 32,000. On Tesla stock, we were up 2.09% today, and Tesla bounced from that oversold condition and got back above the resistance, which is now support at 214, which is also the rising 200 daily moving average. And from here, the bulls can try to push to 230, and then above 230, we're looking for a gap close right around 242. Remember, this is a downtrend, so if we get up to 230, that's going to be strong resistance, which means we could still get rejected and then form a lower high before we continue lower. But you can stay bullish above the rising 200 daily moving average at 214. Just keep in mind you're trying to catch a falling knife, which means we could still be going lower. On Apple stock, we were up 0.25% today, and Apple is bouncing off that rising 200 daily moving average of support at 170. However, below 174, there's a good chance we are trying to go down and fill this gap at 167. And we do have earnings next week on Thursday, so we're going to get a lot of volatility and a lot of movement in this stock very soon. You can try to stay bullish above the rising 200 daily moving average at 170, but do keep in mind it's very possible we still go fill the gap at 167. To get a lot more bullish, I would like to see price action back above at least 175 at that 20 daily moving average. But more importantly, I think the bulls need to get back over 179 and break this previous high at 181. So jumping back over to the S&P 500, this is very critical support, and it's still possible we are in a bull market finishing up a correction, but if we start breaking through these critical support zones, that is going to mean we could be going a lot lower. So know both scenarios, and then you know the price action around this critical level, and if you let the price action do all the talking and you trade according to which scenario we're seeing, you're going to be a lot less emotional and a lot less biased, and as traders, we couldn't care less whether we go higher or lower. We simply need to ensure we're on the right side of that move. So right now it could be either direction as we're at this very critical point. But if you zoom out and you look at the weekly charts and you look at more importantly what's moving the market, a lot of stocks are getting very oversold and could be due for very strong bounces. And that's why I told you it's possible to be a bullish contrarian here, right around this very critical support, because even if you're wrong, it's going to be a very small loss. And when you get these low risk, high reward entries, they are favorable, because more often than not, you're going to win more than you lose and you're going to remain profitable. So don't get overly bearish. I know there's a lot of bearish sentiment on the rise, and that's completely normal. But do remember the majority are usually wrong, and if the majority are getting bearish, we could be due for a very strong rally right around the corner. If you want to come crush this market, consider joining the Stocks Channel Trading Discord community or Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.